This is Don DeBartolo, a senior commodities broker and market strategist with Daniels Trading in Chicago. I'm also the trader behind the Trade Spotlight advisory service. Trade Spotlight is broken up into three segments: Trade Spotlight Futures, Trade Spotlight Commodity Options, and Trade Spotlight Spreads. This is Beyond the Spotlight, a video that will spotlight 2 or 3 markets that may become trading opportunities for this week. This week begins with Monday, July 20th, 2020. Please pause the video and read the disclosures to understand the risks involved with futures and commodity options trading. Let's take a look at our first chart this morning, September 2020 crude oil. The market has rallied since that early April or mid-April lows down in the 22-23 price level. Again, markets rallied. We filled in this gap right here. This was important for me, filling in the gap. Not quite all the way up. You can see this high right here, which is 41.74 from June 23rd. Didn't quite match this low that was put in on March 6th at 42.49. But close enough to fill in this gap, a bulk of this gap. And since has been trading sideways and coiling up here. You can see the market is right on a 20-day moving average, a 50-day and a 200-day moving average are converging. The MACD indicator is showing no real trend, a flat market. Momentum, this is a stochastic indicator, is flat as well, a little bit overbought here. So what I'm looking for now is a pullback in this market, perhaps a break of this lower trend line here before getting short, and writing this down to about that 32 price level would be the target on this trade. The stop loss would potentially go above that session high, that highest high at 41.74, again from June 23rd. That can keep the risk down on a futures contract, or we may look to do a option trade where we're purchasing a put option or a put spread, or even a future spread. Again, just to keep the risk down, margin down on a typically volatile market, although as you can see over the last month and a half, it's been pretty steady, a couple big ranges in here, so perhaps even a futures contract would work if we get that breakout to the downside. Then down in this level here, this could set up a pretty solid buying opportunity if the indicators hook back up. The next chart I want to take a look at is the September 2020 orange juice contract. And if you're following the Trade Spotlight, you would have seen last week I sent a recommendation out to sell orange juice. It was on a break of this low here. It was filled on the position Friday. As you can see, we traded just below that low. The low from the previous session was 121 even on the 16th of July, and on the 17th we traded down to 120.90, and then you can see what happened. A big reversal bar, taking out our stop loss in the same trading session for a loss of $705 on the trade. I spoke about this setup in that trade. I like the 1-2-3 formation. This is the number 2 point here, but I didn't want to wait for a break of that number 2 because I did like how the momentum was strong to the downside. Obviously the trade didn't work out, but I still like September orange juice to the downside. Seasonally, this is the time to be short orange juice, so I'd like to set up another opportunity, regardless of taking a loss on that first trade. I did mention that the trend was not quite down yet, so it was a little bit more of an aggressive entry, but the way the orange juice market was selling off, just wanted to catch it down to this particular level down here. I've got that target, let's see, about that 200-day moving average, which comes in right now at 113.31. That's about where the target is for this trade. So may look to sell on a break of these 2 lows here. If you want to be a little more conservative, you can wait for a break of the number 2 point. That's right here. It's not a strong 1-2-3 because the number 1 and the number 2 are just 4 sessions apart. Usually like to see a little more time and distance between those points because it sets up a stronger formation. But we can trade this on a momentum entry technique. So ideally what we see here is this momentum pull up a little bit. So you get a little bit of a, you see there's a sell-off here this morning, but perhaps that stops, market trades back up into this level, and then the momentum hooks over, chart starts to hook over, and we can find an entry up in here or these points to sell it on a break. Again, conservatively, you can wait for a break in the number 2 point, and then we'd be looking for a target into this range here. The third chart I want to take a look at this morning is the December 2020 copper market. You can see a big rally here in this market going back to the end of March, taking it from down to about 2 even all the way up to almost 3 even. Tremendous move in copper. It made sense with things starting to open up again, China opening up. Copper's a big industrial metal. Nice rally. But now it looks like it's set up a double top formation. We go all the way back here to last May, with that high being put in at 302.10. Actually, that was April 17th, 302.10. This high here, this recent high that was put in last week, the 13th of July, was at 370. So I'm actually looking for an opportunity to sell this contract. You can see the momentum has hooked back up. This is the stochastics indicator. So maybe there's one more test at the 3 even level. The trend is waning though up in here, so I feel like this is going to be exhausted once it gets up into this level. You do have the 20-day and the 50-day moving averages pointed up, and obviously with this big rally that's going to happen, but you can see the 200-day moving average is rather flat. So I'm going to be looking for a trade setup. You can maybe draw a trend line off these lows here, and we can find a sell order placement, in this range. But I'm really looking forward to an opportunity to sell copper. Futures can be volatile. Maybe we'll look at options, although the option market is thin in copper. So you have to look at those even strike levels like the 27.5 or maybe the 25 even strike prices to get into the market with some decent volume and open interest. But we'll take a look and try to find the best vehicle to get into the copper market. Seasonally, this is the time to be short the December copper contract as we get into the mid-late summer. So watching for an opportunity in the copper, which could come quickly as volatile as this market is. This is a quick snapshot of what the Trade Spotlight email service looks like. It's sent directly into your inbox. You get the timestamp so you know when the trade recommendation was sent out. A write-up of the trade, the precise entry and exit orders, so you know the risk-reward parameters for each trade. Any pertinent information like margin requirements or contract expiration dates, and a chart that you can click open to view. If you want to learn more about the Trade Spotlight or sign up for a free trial, go to danielstrading.com, click on the Advisories tab, and then under Technical Analysis, you'll find Trade Spotlight. Click on it, you can learn more, see recent posts, subscribe. I offer a free 90-day trial. Otherwise, it's a free service that I provide my clients or clients of the firm. If you have any questions on any of the charts I discussed today, Trade Spotlight, or just trading in general, you can reach out to me. Here are my numbers. Here's the email address, tradespotlight@danielstrading.com. Thank you for taking the time and listening. Hopefully you find some good trading opportunities from those charts I showed today, and happy trading.